Want to show you some data on the NASDAQ and S&P futures. This is the E-mini NASDAQ, and you can see this market was strong initially in the session. Then it sold off. It sold off towards yesterday's lows, and you saw the negative volume. See, this sums up the volume throughout the day. Positive volume. It went negative right here, and so what you see here is there's more negative volume at higher prices. So the price is up here is about 300 points higher in the NASDAQ than it was, yet there's more selling pressure in the session since the session opened. And so the market is, in my opinion, just hanging on for dear life. A lot of the bulls are calling this a buying opportunity. I don't see it that way. I think we'll take out the lows. We had some cycles where 2 weeks ago, I want to show you this. First, let's look at the S&P. Then I want to show you what happened 2 weeks ago and what happened this week. It's even greater in the E-mini S&P. This divergence, the S&P is more liquid, and so it's easier to skew a less liquid market. But this market, you see the S&P way down here, 4250 area, 4260 area, S&P futures, 160 points higher up here. Without much change in volume, and now that the still up 18 on the session with incredible selling. There's a lot of selling on the session, but we're still up 18 on the session. So this is just strange price action. Prices seem forced higher. I want to show you what happened a couple of weeks ago. Talk about the FOMC meeting as well. So on Monday, 2 weeks ago, it was January the 10th. Marko Klanovic, JP Morgan's top quant, said to buy the dip right here. Looked like a lot of symmetry, and so that worked on Monday, Tuesday, Wednesday, Thursday. Friday it rolled over, and then we've sold off since. And then this past Monday, the 24th, some of the perma bulls came out. Time to buy it, and then you see it. A lot of volatility in here, a lot of range. And so we had the FOMC meeting yesterday. What's interesting to note is, I'm not biased towards the downside or the upside. I actually had some way out of the money calls above the market in the NASDAQ. I thought we might get another parabolic move. And so I didn't have any puts in the market, but I did have calls. And so I thought we might seasonally have a move higher. So I was more biased to the upside, but now that it's down and the Fed's monetary policy is indeed tightening, what's interesting to note is the Fed's balance sheet has increased to $8 trillion. What happens if the market sells off before the Fed even gets to start reducing its balance sheet? What happens if the market sells off before it even gets to start raising interest rates? And so those are some interesting things to think of. The Fed will be left holding the bag with low interest rates and a big balance sheet and a market that's already crashed. So those are some things to consider. We do talk about a lot. There's a lot of fundamentals in the market, but the seasonality and corporate earnings and price to earnings. But the number one fundamental continues to be the Federal Reserve, interest rate, monetary policy, balance sheet. And so if the Fed is going to tighten, the trend could be down. I was asked about longer term trends in investing the other day, and I would say that if you look at this, what happened since 2009, the Fed came in, has had easy monetary policy, emergency stimulus since the lows in 2009. And you see the number one indicator, it's not like a RSI or an ADX or anything like that, but the number one indicator has been monetary policy of the Federal Reserve. If it's been easy, market's up. If it's going to be tight, market's going to go down. Could it be completely mean reverting? Possibly. It could be there could be a complete mean reversion in the market, and this whole thing could be just related to the Fed, or at least half of this back, I would think. This is a back-adjusted continuous futures contract, so it doesn't represent the right price levels. But Fed policy it matters more than just about anything. And now that we're tightening, we see this downtrend, and the market is determined to still live in the past and still tends to act like it's going to prop up the market, or it thinks the Fed will be easy again. The Fed cannot be easy because of inflation, but you know, anything could happen. They could stimulate the market further, and they could get another move higher. But that long term, I think that will cause even more inflation and even more issues going into the future. So, I wanted to share my thoughts with you on what's going on in this market, why it's so challenging, and these old habits of buying the dip die hard and trying to prop up the market. Those old habits die hard, but I think that eventually we will start to see some more selling, and that this could be just the very beginning. This is still like a top formation. If you look at it, it feels like the market's already sold off a lot, but we could still be at the very top of a downtrend, a bearish downtrend in the market if things continue in this direction. Hey, David Bean here. Welcome to Capstone Trading Systems YouTube page. Be sure to subscribe to join our community of algorithmic traders. We are real money traders. We share our winning streaks, we share our losing streaks, as well as market updates, strategies, and coding tips.